Hi everyone, this is Sian Shubudia and I'm presenting the amendments in your tax syllabus which is applicable from June 2023 attempt onwards till March 2024. So let's quickly have a look at the amendments that have taken place. So I'll take you first to this. I've downloaded the syllabus from your ACCA global platform. From the taxes, I've downloaded the recent syllabus. And when you download the same as well, towards the end, you will find your syllabus changes mentioned here. Okay, these are the syllabus changes that have taken place. Looks very technical. So let me make it easier. I've made the list of amendments. So now let's go into them one by one. Let's look at these major amendments in UK tax syllabus, which is applicable from June 2023 to March 2024 exam attempts. Number one, amendment has taken place in the chapter Computing Taxable Income and Income Tax Liability, wherein we calculate the tax liabilities on the different kinds of income, non-savings income, savings income, dividend income. So the changes that have taken place is in the dividend tax rates. Now the amendment tax rates are, for basic rate, it is 8.75%. Earlier it was 7.5%. Higher rate taxpayer, the rate applicable is for dividend income 33.75%. Earlier it was 32.5%. For additional rate taxpayer, the tax to be paid on the dividend income would be 39.35%. Earlier it was 38.1%. Do you need to learn them? No. This would be given to you in your tax rates and allowances chapter. Moving further, let's go to chapter Employment Income, wherein some amendments have taken place. Major amendment has gone into car benefit. So in your car benefits, if you remember your earlier percentages, yes, these rates have changed. The percentage for electric car with zero CO2 emission is 2%. Now, the hybrid electric cars with emissions between 1 to 50 grams, the CO2 percentage is as follows. So this is the table given to make you understand the CO2 percentages based on the miles that can be traveled for this electric range, which is if the miles traveled is 130 miles or more, then the CO2 percentage is 2%, based on which we're going to calculate the car benefit. 70 to 129 miles, the percentage is 5%. 40 to 69 miles, 8%. 30 to 39 miles, 12%. Less than 30 miles, 14%. Because the more lesser the electric mileage, the more fuel consumption we are doing. That means it is more towards fuel consumption and less towards the electric consumption. Okay, now for the petrol cars with CO2 emission of up to 55 grams per kilometer and the diesel cars which are meeting the RD2 standard, the table is as below. 51 grams to 54 grams per kilometer, the CO2 percentage is 15% now. And for 55 grams per kilometer onwards, the percentage is 16%. Please keep a note of it. Earlier, this percentage was 15%. So earlier it was 14-15, now it is 15-16. Now, few points to note. For cars with CO2 emissions higher than these levels, the percentage starts at 16%, as I said, as above, and builds up in 1% steps for every 5 grams per kilometer of carbon dioxide emitted in excess of 55 grams per kilometer. To calculate, round the CO2 emissions always down to the nearest 5 grams per kilometer. Now, diesel cars which are not meeting the RD2 standard will have additional 4%. But the main rule remains same, that the overall capping of the total percent of the CO2 percentage is still 37%. So whether it's a petrol car or diesel car not meeting RD2 standard or diesel car meeting RD2 standard, the CO2 percentage can never go beyond 37%. Here, next, change that has happened is in the value of car fuel benefit, the base figure. So the base figure is now changed to 25,300. Do you need to learn all these? No. Thankfully, they would be given to you in your tax rates and allowances chart. But boss, what you need to learn, what you need to understand is how to apply these rates and get the answer for the taxable benefit. So that is important for you. The next company van benefit, the amount has also changed. Quickly understand it. So company van producing zero CO2 emissions will have 0% as van benefit as well as 0% as fuel benefit. For vans with CO2 emissions above zero, there is a standard benefit of pound 3,600 a year for employees with private use of company van. And for the additional charge, there will be an additional charge of pound 688 where private fuel is provided to the employees for the company who are using the company. Computing trading income. So now guys, we are done with the changes that have taken place in employment income in your calculation of income tax liability. Now we are on the third change in the chapter computing trading income. Okay, and in the topic leased cars, if you remember earlier, what was the concept? That the leasing cost of a car with CO2 emissions exceeding, earlier it was 110 grams per kilometer, but now focus, it has become 50 grams per kilometer. So I repeat, the leasing cost of a car with CO2 emissions exceeding 50 grams per kilometer, the disallowed expense is 15%. So allowed will still be 85% like earlier, just that the limit for CO2 emissions has got decreased. Now, very important. So when you're writing your answers in the exam, you have to pay attention to this. The word motor car is amended to car in chapters computing trading income, capital allowances, property business income, investments. So now it has become car and you will not say motor car. When we go to NIC, it has got some major amendments in the rates. So quickly have a look. For class 1 employees contribution, the threshold limit has now increased to 12,570. So now for the cash earnings between 12,570 to 50,270, the NIC percentage is 13.25%. Excuse me. For cash earnings above 50,270 pounds per year, the NIC percentage is 3.25%. For class 1 employers contributions, for cash earnings of employee, which is beyond 9,100 per annum, then the employer's NIC class 1 contributions would be 15.05%. And remember, there is an enhanced employment allowance also. Earlier it was 4,000 per year. Now it has been increased to 5,000 per year. Class 1A on taxable benefits, which is again to be deposited by the employer, is calculated now at the rate of 15.05% on the amount of taxable benefits. Now going to self-employed people's NIC, that is class 2, class 4. Let's see the amendments. Class 2 NIC is now amended for its small profits threshold as well as the pound per week. If taxable trading profits exceed small profits threshold for the tax year of 12,570, then there is class 2 NIC to be paid by the self-employed person on the basis of a fixed rate per week for the business that has happened in the tax year, in the year. So 3.15 per week, or if it is run for the full year, then we say 164 pounds per year. Class 4 NIC is again on the taxable profits. So if your taxable trading profits are between 12,570 to 50,270, then the NIC rates are 10.25%. If it is beyond 50,270, NIC rates are 3.25%. Repeating the same line again, you don't need to learn these figures, people. These all will be given to you in your tax rates and allowances chart. But what is needed is application of them so that you don't do error in the exam. Now I come to the last amendment for your June 2023 to March 2024 attempts. That is self-assessment in the chapter self-assessment and payment of tax by individuals as well as corporations. So in both these chapters, we have a common rate, which is the rate interest on underpaid tax and interest on overpaid tax. That is also changed. So now interest on underpaid tax is 3.25%. Overpaid tax is as it is 0.5%. Do we need to learn it? Again, no. This would be given to you in your tax rates and allowances. So then why we discussed amendments? This is because you should know that these things have changed. Okay. And so you should know how to apply them. And especially the students who are appearing for it again, the tax exam in June. Excuse me. Or appearing maybe for the, they have a reattempt for the tax exam in June. Please keep a note that you're not using your old figures, because I know that remains in the head. So please remove it and replace it with these new figures. That's all. Thank you so much, guys. Good luck.